Welcome, everybody. Thanks for joining us for another week here at Maxi for a weekly review of these markets. This week, we got to see the FOMC meeting. We got to see the news about interest rates hiked. It kind of hit the mark that we were already projecting at 0.25% increased federally. And, the DXY kind of playing out our predictions from last week too. But of course, as we have the chart pulled up right now, let's take a look first at the continuing short squeezes that are still littered throughout the stock market at the moment. And right now you have up here the Oprah Limited shares where the Maxi Trading Buddy here has printed bull, and that was a 552% spot trade volume or spot trade profit ago. And not only did we print bull at basically at the base of the parabola and at the start of this squeeze, but we also got the bear print basically calling the top and giving us a signal to close out of this trade really, really nicely. So this was a really clean example of our trading indicator calling an incredible pump in the crypto. Not the crypto, in the stock market on this short squeeze.
Yeah.
So
stock market, it's been really cool.
I thought crypto because I see 550%, and that doesn't feel like stock market trading.
Right? You hardly ever see this with stocks. It's unheard of. And we got a bull print right before the takeoff, and then we actually got the bear print right at the top, and the whole thing. And you can also see how the bull print with the green band and how price pretty much kept bouncing on the green band. Yeah, which is a bullish sign, So
it's crazy how the green band basically became the parabola too.
Yeah, exactly. It became like support. It became the parabola, and and now it's on bear. So my guess is, in a bear trend, it'll keep getting rejected on the band.
Exactly.
The band
and the band will
red.
flip to red. We'll start moving down. And then, as usual, I think generally speaking, when we have a parabola breakout in any asset, we've noticed that when the parabola does eventually break, as we're seeing it breaking here, that the retrace tends to be around 80%.
So if it breaks down, it's it's anywhere generally from 60 to 80% is what conventional TA. That's what I've read. I mean, it's stocks. So if it was crypto, you would see, get down to it. It basically dropped to 80%. You can almost be certain.
Always. 60 is definitely a pretty safe bet for the stock market side.
For stocks. So that's still a huge drop.
Yeah.
So we were positioned basically with because we had our indicator, we got the whole thing. Last week was we showed off Carvana, that was huge, and that squeeze is still going.
We haven't.
Opera, it seems to have topped out. So
we haven't gotten our bear print. We haven't gotten the bear print on the Carvana yet, but the bear print here on the Opera one definitely starting to show us that it's time to take our profits off the table here, and possibly even flip into a short position on this. If the parabola is breaking, then it's there's quite a bit of room down to get back to a reasonable price post this short squeeze, and to short sell this shares, I would say maybe taking in the money put options isn't a bad strategy. Once we see this bear print coming in, we see the trend line starting to flip,
and also the band flip to red. So once you get a bear print match the band flipping to red, then it's we can be sure of taking a short position or exiting along.
And then for me personally, if I am going to enter a short sell for this share, what I would be looking at for my strike price for that put option, I'd like to keep it slightly above the strength band. So I would definitely purchase in the money put options that are going to be, looking at this chart, probably around $21.75 or so, maybe even $22 as a strike price, which that would be right around where we're seeing that strength band, and that's about where I'm expecting us to flip to red, start moving down, and like you said, once it does flip to that red and starts pushing down again, we should expect the strength band to act as the resistance. So even on a retest, we shouldn't push above it anymore. And therefore, I would like to keep my option in the money by purchasing a strike price above that. But
exactly,
that's a personal kind of thing. I know some people are going to be like, oh, I'm going to buy put options at like $14 strike, way out the money at the moment. But, you know, I mean, if we do get a retrace of 60%, those will be in the money. And of course, they're quite lucrative if you can call those correctly. Personally, I hesitate to purchase option outside of the money. Yeah. Buying out the money options is a little bit more of a gamble. It's also you tend to be paying a higher premium for them because those options are effectively worthless when you buy them, because if the price stays level, you know, your option contract is worthless. And so when you're looking at buying in the money options, you need to basically calculate out the value of the option that is currently in the money versus the cost of the option contract itself. And that difference between those prices tends to make for significantly lower premiums. So if you're looking at your option like trading application, wherever you're trading options, the number you're looking for is the price to break even. Usually there'll be a metric that's like, here's this option and this is what price like change you need in order to break even. You'll notice that in the money contracts have a much smaller change needed in order to break even, and that break even price should be considered your premium for the contract. But that's a little like tangent here about trading options. I'm very very excited to see this kind of move. And then to be kind of blunt, when it comes to companies like Opera here and some of the other short sell or some of these other short squeezes that are ongoing, the volume on those option markets can be very limited. And so you know, be aware.
The liquidity can be pretty thin.
Yeah, and when the liquidity is thin, what that means is if you're market purchasing like option contracts, the spread between, you know, the bid and ask prices can be absurdly wide. Like I've seen a few options on, what was it, like Carvana recently, where it was like out the money options where the current ask was like 50 cents per share, so 50 cents times 100 for an option contract, so it'd be like a $50 contract, and then the current bid was like 1 cent. So like there was like, so so if you're not paying attention to the volume depth of the option contracts that you're trading, you should be, because if you did, you know, see an option that's like, oh, these are trading for 1 cent, it means that people are offering 1 cent, but somebody isn't offering to sell anything up until 50. So you can have absurd spreads, and generally speaking, you know, purchase options always with limit orders, and always pay attention to the actual volume and the actual amount of liquidity available for those options, because it is not a fun situation to be in, purchasing options and actually being correct, maybe coming up quite aggressively, but then not being able to sell them because there's nobody buying options. So there's definitely, especially when it comes to some of these squeeze assets where it's like, you know, kind of off the beaten path stocks, you got to be aware.
Yeah, it's not like you're trading Apple or something.
Yeah, exactly.
It's popular. So these, you know, that's why they can move like this. But even if, but this whole move has just been, we profited not trading options.
Exactly. 500
just being like
spot
just holding shares and just holding it and you know, exiting right on top. Yeah. And that's like 552%. That's insane.
Much lower risk, much easier to find liquidity when it's just spot trading shares. Yeah. This was easy trading, I have to say, especially with the trading buddy just being like, hey, buy now, sell now. Like, not much.
Yeah,
much else to it.
We've been writing a few squeezes. Carvana was, and this is there, and then we're hoping to see more of this coming up. We'll let you guys know, you know, how we do on those. But yeah, so looking at some of the stuff we also talked about last week, I think we talked about the DXY.
Absolutely, The DXY, this is the index for the US dollar. So as the DXY goes up, the strength or the value of the dollar cash asset increases, is basically the short version of this.
So to recap, like whenever the dollar goes up, stocks and crypto tend to move in the opposite direction, so they drop. And last week we saw this downward channel, and we saw last week sort of close with the bounce at the bottom of the channel. And
Yeah.
our guess was that this week the DXY would go up, and that's exactly what happened. So just to zoom in a little closer, we got this like sort of tweezer bottom,
Yep.
right on the channel,
which is a little bit of a bullish indication. We mentioned last video too. It's like the tweezer bottom indicates we might be getting this bounce, and here we are, and there's the bounce.
And there's the bounce, and actually the SPY and QQQ was chopping around, and it did drop.
Yeah.
We did see like the same thing with crypto. So I don't know, the coming week would DXY go. I can see a resistance here. This is the weekly chart around like 102, but we don't know if it's gonna top out there and fall back down, or it's gonna push all the way to the top of the channel.
Yeah, and I think if it pushes, then I feel like the equity markets, like the crypto market and the stock indexes, will likely cool off a little further than they have already.
Yeah, it'll drop, or at least like chop around.
Yeah, at the very least, flatline. Definitely not continue the run. And you know, if you've been trading like the Nasdaq and the S&P 500 indexes, they have been having quite the run lately. Like we're coming up, kind of retracing a lot of the sell-off that we've been seeing during the bear market, and basically a shift kind of into a much more bullish sentiment. And that sentiment has really left a lot of the institutional traders behind at the moment. A lot of people are still very much like, oh, bear market is still, is still in are like being canceled, hasn't really set it in for a lot of the institutional money. And so that's where a lot of these short squeeze opportunities are coming from, is because during the bear market, a lot of these big players, these big hedge funds, were short on the market, and they still are short. And then now that the market's starting to turn around, you have a lot of these shares, such like Opera, like the Oprah. I keep saying Opera. Oprah, like the browser one we just had up, or like the Carvana, or like, I think Elf Beauty Products had like a pretty decent squeeze recently. Like there's been quite a few.
Yeah, we wrote that too, which was great.
That one still potentially got some juice left as well.
I think so too.
Yeah.
I think so too.
But you see a lot of those opportunities come from the fact that institutional money is still very much in this bear market mood. Although, we're seeing with our Trading Buddy indicator, the bear market mood hasn't really been, driving the market for several months at this point. We're looking at the weekly chart here of the S&P 500 index, the SPY. And so as these markets have been rebounding, these short sold assets need to cover. And as, they need to cover at a higher price, retail investors and obviously bullish traders are buying up the shares to make the price more expensive for the short sellers to cover what they already have to cover, and that causes these short squeezes. And so we're seeing quite a few of the short squeezes because there's still quite a bit of institutional money on the bear train here, still kind of like
they're either like sidelined or they're completely in denial. But we've been like long ever since we saw this bull print, or the bull signal with the green band, with our Trading Buddy indicator on the S&P 500. We got this signal way back in April.
Yeah, it's been a while.
And of course, the markets have just been on a tear. Ever since, and so we've just been like playing the trend, and it's worked out really well with the indicator. But like Max was saying, there's a lot of people, big institutions, who are still in denial or sidelined.
Yeah.
So, and also FOMC happened, right?
Yeah.
This week.
Just like
and
we
I
expected.
Think the market consensus was 0.25%.
It's what we got. So it didn't really make a huge impact on, at least right now we're looking at that chart. You don't really see like a big, holy shit, sell everything because the interest rates are coming up.
Yeah, it actually closed in the green.
Yeah, still kind of bullish closes here. And so a lot of that was kind of, we were talking about that last video too, where it's like the market is expecting this. So it could be that this is priced in. And that's almost what it looks like right now. It does seem to be a little priced in. But I am still very much interested in seeing how the DXY continues to play out the next week, because like you can see this tear is quite, it's been running up for quite a while, and it should be getting a little bit low on steam here too. And
because like it's approaching close to its like last all-time high, so
big resistance
it's going
at
to
those
take
levels.
a little bit of effort to like clear this section. So I wouldn't be surprised if we like cool off a little bit, or we just chop around, which we said in our last video too. So
keeping a little bit of an eye on that, as far as like not necessarily expecting the market to run aggressively like it has been over the last few months, but keeping an eye on seeing it cool down. And again, we have that strength band as part of the indicator. If we do start to sell off, I want to see that strength band be the bouncing board where the price stays above, to keep my bullish sentiment long term, because ultimately
so if we see like this was back in 2020, like price just kept going up, but then with each pullback the band did act as support.
Yeah, exactly. And that's how we knew that the trend was still not invalidated longer term.
Right. So it was like you could still like buy the dip,
Yeah.
And then when it flipped to bear with the red band, you can see price actually keeps getting rejected.
Yeah. And that's when you don't want to be buying the dip anymore. That's when you change to a hedge strategy. You want to wait for this turn of the market. Maybe even set some bottom like targets, see where you believe the market will, and then like start entering there even before, before a market trend flip. But at least you'll know that we are going to be pushing low, and you can be ready for it.
Exactly.
But yeah.
So I think it'll depend on the dollar. So if the dollar does drop from here and it doesn't like push back up, and if it somehow like drops, and then if it also loses a channel, then I think you can see definitely the SPY, the S&P 500, and the QQQ, possibly like then make new highs.
Yeah. And then you can see
I think like highs on the DXY too.
Once we see new highs in these indexes too, then you can see some, you'll be in uncharted territory at that point, and you can see very, very aggressive moves again. Very, it'll be meme time again. You'll see the,
That's right. Stonks go up.
Stonks only go up. Yeah, exactly. And so we're definitely keeping close eyes on that right now.
Right. And like we said, also the DXY like affects the crypto market. So this is Bitcoin on the weekly again, the weekly chart, and if you look at the close, I mean it's right on support, but that's not a very bullish candle. Like now it's starting to look like a potential like double top,
Yeah.
Like here and then here. So of course, like early week we're gonna see like a retest. And my guess is that we might end next week in the red.
Yeah.
Like lower.
It is starting to look a little bit choppy. Also, the monthly close is coming up.
Monthly close is coming up, and looking at the monthly, like we've been sort of like in this rising wedge pattern. Like, let me show you what I mean. So if we look at these, you can see that these like, it's been in this sort of like rising wedge pattern, and rising wedges are typically bearish.
Yeah.
So, and especially with like low volume going down, and rising wedge going up, that's like a bearish divergence too.
Yeah. So what we're likely going to see, especially with this chart being very clear here, very clearly in a bear print still, very clearly below the strength band. It almost feels like we're going to be retesting the band and being rejected. Like.
Yeah, exactly. It's already very close to it. So like this was also like resistance here, but like I think it was like the next month if we like. Well, basically, if we lose this rising wedge, then it's bad news. Then we're gonna definitely like either go back to the old lows or just right around there to like either make a higher low or like a a double bottom that could also be.
Fingers crossed for the
That is
higher
if we-
low, because the higher low
Exactly.
is the first indication of a long-term flip here on the monthly, because we want to see
Yeah,
higher
so,
lows
like-
and higher highs.
That's right. Like that's what you want to do. That's what you want to see in the uptrend. Like if we go back to the last bull market, right? Like this was in 2019.
Yeah.
We can see like, you know, we got a bull print, but then like price, it did manage to cross a band, but then like it did like drop down and retest
All the way to
last
that.
low.
A
We can
little
see,
bit
like,
of a higher low though.
Yeah, exactly.
Yeah. And we didn't
So
get
it
the
did
flip in
end up
the
being a higher
signal.
low.
We didn't even get the
We
signal
did.
flip. So it stayed bear. It
But
stayed
here
bull.
we still
Stayed
haven't
green.
exactly. So
Yeah.
we did get the signal flip, and it stayed green because
Yeah.
like it kept bouncing, and the candles kept like closing about.
It's
that.
definitely getting kind of
See,
shaky
it
though. It looked like.
Yeah, exactly.
I
This
would have
was,
been like
the COVID
sweating.
crash.
I would have been sweating a little bit.
This was so, but here we still haven't got the
Yeah.
a bull flip. We're
And
still on
the
bear
bull flip
and
on the
price
monthly is definitely for me, and Sid, that's like the confirmation we're waiting for to see the bull market is returning. Right now,
Right.
I think in stocks it's a lot easier to call the bear market over. In crypto, I'm not quite ready to do that yet. And
Yeah,
the monthly,
in
and look at the
stocks,
look at the
actually-
monthly. There it is in stocks.
Look at that. Q. We got a bull print.
Let's
We
go.
got a bull signal with the green band
Yeah.
flip again.
And you're
So
also
this
not
is
seeing. We're also not seeing that same volume divergence here. Like, look at the volume
Yeah.
below there. The volume is high, like basically the same amount of volume
Pretty
as
healthy.
we've seen before. So this doesn't feel like a
Like
divergence.
before, yeah.
This does not feel like as much of a bearish kind of sentiment is being derived from this chart compared to the
Right.
Bitcoin chart. And like,
Right.
yeah,
And the SPY, the S&P 500, we haven't got a bull print yet, but I think we're close to getting one.
yeah, damn,
like,
it's crazy.
yeah.
And the strength band never even flipped. Dang, what a short,
Yeah.
what a short bear market cycle for the
Yeah.
for the stocks. Like that's crazy to
Like
me.
even like this
Yeah.
was like back in 2008, the housing market.
There you go.
crash.
So yeah,
that
that's
was a
that's like a proper
that was
bear
a
market.
proper-
Yeah.
yeah.
What we have here is
Everything else has just been like sort of, you know,
yeah,
by the dip, sort of like
exactly. Yeah,
situation.
exactly. Until that strength band flips to red, I would always consider buy the dip as a strategy, and so that seems to
Right.
have been a strategy this entire time still, which is
right. So
kind of great. Although, like we were saying, looking at the Bitcoin market, it's definitely painting a lot more of a bearish picture, and it also is in line with like what the Bitcoin kind of boom and bust cycles have been since the inception of this market, or this I would say asset class. They have been cycling in like these kind of 4-year bull and bear cycles effectively, and a lot of that has to do with the issuing of these Bitcoins into circulation being cut in half every 3 years through the halving event, which is just part of the Bitcoin distribution schedule. Again, these events are known and people are aware of them, but they are also very easy to line up with these cycles, and we're very much still about a year out from the next halving event, which tends to act as the catalyst for the next bull run. So this chart is still very much in line with that kind of sentiment, at least for me, where it looks like we're probably in the next few months going to break this wedge down, because this is like
right.
Sid was saying, this is a very bearish divergence. We're getting the rising wedge with a falling volume. We're still on
Right.
bear print. We're still below the strength band. So my expectation for this chart is to be rejected somewhere below or at that red band, and then move down again. I honestly probably gonna make, if I had to guess, I had to make a guess. Again, I'm not in the business of guessing. I'm in the business of reading the charts, trading the charts, and being informed by that. But if I had to guess what would happen over the next several months, I would say probably a sell-off to a higher low. So likely,
Yeah,
I don't
so-
think we're going to make lower lows again, but I don't think we're out of the bear market cycle just yet. And we have, have a year.
Yeah, just looking at, basically this is the countdown. Like we basically have 1 month, 1 day left for the monthly candle to close.
Yeah.
And looking at this, like this, right now it's bearish. Like you
Yeah.
see, this kind of looks like a tweezer top. That's actually what it looks like.
Yeah.
You see these two wicks about the same length, and then this is support, monthly support, but it's just right on there.
It's not a super strong monthly
candle. Looking at the
candle.
type of candle, it looks bearish. You know,
Yeah,
right?
it looks like we're about to get a bearish close with that tweezer top right on support, and within the wedge with the divergence of the volume sinking off. And on top of all that, we had some pretty bearish news in crypto just this morning with a pretty massive exploit hitting the curve pools specifically. So part of what we do in our Discord and for our members is, you know, keep an eye on these markets. And that definitely is something, you know, that really helps. Yeah. So then here, like this morning at about before 10 a.m., shared some of those implications of like, hey, there is an exploit ongoing. We were sharing this, I think at the point that this was posted, the damage of this exploit was just under $20 million exploited, which is a lot of money. But
and people still weren't sure.
Yeah,
like it wasn't news yet. Nobody had, you know, none of like.
That's a big part of this kind of exploit. That's a big part of like being in these DeFi markets. When there is a exploit, it is very difficult. Like it is very imperative to act quickly. But it's also very difficult to understand the full scope of something that's happening as quickly as you need to act. And so, like I was saying, when we posted this, about $19-20 million had been already affected. By this time of recording, it's now close to 7 p.m. So we posted this around 10 a.m. And now that at 7 p.m. the damage is closing in on 60 million, and it's still an ongoing exploit. There's also far-reaching implications because the CRV token, which is the Curve Protocol Governance token, seems to be also part of this exploit. And there's quite a few of those tokens that have been drained out of the liquidity pools into malicious wallets that are participating in this exploit. And that in itself is, you know, not great, but understanding also that this CRV token is part of the decentralized finance ecosystem in a way where there's plenty of money markets out there like AAVE, Farax Lend, like huge money market protocols where people supply assets and then borrow other assets, just like, you know, the way money markets work. And these money markets use CRV tokens as part of their collateral. And so now when you're seeing, oh, there's an exploit of the CRV token in the hands of wallets that are looking to profit and you know, dump this on the market, the implication of that reaches beyond just, oh, this is affecting people who participate in Curve liquidity pools or who own CRV tokens. No, the implication now is that if the CRV token is you know, sold by these exploiters, and the on-chain on the blockchain price of that token falls, there is a threshold price at which the CRV token in the money markets used as collateral to borrow other assets would become liquidated, and the amount of CRV tokens that's being put up as collateral for other assets that have been lent out is over $100 million. And the implication now is that as the liquidity on the blockchain thins out for CRV tokens and the price of CRV tokens falls, it is possible that debt that is collateralized by CRV becomes liquidated, and the liquidation process involves the protocols, these money market protocols, taking possession of the collateral of the CRV and spot selling it to cover the debt. But with lower and lower liquidity depth for selling that debt, the risk becomes that liquidation cascades into an absurd, you know, into the price falling further, making more of the debt liquidated, puts more sell pressure, cascades the collapse down. And the real issue then becomes that these money markets won't be able to sell those CRV tokens for the debt that they have against them, and then the money that's been lent out will be bad debt effectively. Like the protocol will not be able to remain solvent.
Wow.
And that insolvency would affect a lot more than the people in the curve pools or the people who, you know, are participating directly in supplying liquidity to a money market, because these money markets are at the foundation or at the heart of many different protocols on the blockchain. So things like overnight finance and their assets are like USD plus and DAI plus. A lot of that asset is backed in assets that are participating in the AAVE money market, and that money market is exposed to CRV price. And so, you know, Forex Lend, like I was saying, Forex Lend is how Forex, the stablecoin asset, is issued into circulation against collateral. And so again, if that collateral becomes insolvent, that means the collateral backing the $1 peg of Forex is no longer 1-to-1, and so then the $1 peg of that asset could lose its, you know, its peg to the dollar, and then your stable coin could lose its peg. And so understanding the interconnectivity of all these assets and, you know, the potential fallout of these hacks is not super straightforward, and is absolutely something that we do in our community, where when these things happen, we try to be as on the pulse, you know, finger on the pulse as we can, to let people know what's happening, and then share also the wider reaching implications of what's going on and what is the best course of action. And so like this morning at like 10 o'clock, I started unwinding some of my like curve exposed positions. And yeah, I mean, I pulled out, I took a little bit of a like loss for some of those, but hey, it's a lesser loss than it would be if I pulled them now. And the thing is, pulling them now is an easier decision to make because a lot more information is out now about what's going on, and it's a lot, you know, it's a lot more clarity. But with that clarity, you know, more people are aware, and then therefore more people are like taking these same actions. So being able to make those moves, you know, within the first hour or so of the exploit being being not even being published by the people being exploited, but being noticed. Just
being noticed, exactly, because now the last we heard was it's over 52 million.
50, that's a lot.
You know, so like just the difference during the day of like 20 something to like literally it's like more than double now.
Yeah, we're coming up on almost
and it's
3 times what it was.
And it's still going on. So you know, like it helps that like, so we keep an eye on stuff like this.
Yeah.
And we notify our members, our Maxi members. We're part of the Maxiverse. Basically, it's our exclusive Discord community.
There's been a few times in the history of our operations where we've had some pretty major issues on the crypto chains, and we've been able to help members like mitigate the damage or the fallout from those issues. One of them, Oh, go on.
We put some of them on our website. It's in the Maxiverse section, but like a few of them have been FTX. Everybody knows about the whole FTX thing, and we
were able to tell people what was happening and to withdraw money before they halted withdrawals. So people people within the community actually got their money back like days before all this shit hit the fan. And then with there was the Circle and the US dollar coin depegged risk when like that was there. It was not super long ago.
That was a few months.
Yeah, a few months.
But there's also the you know, the Gemini Earn program.
Yes. Oh yeah, you're
which
right.
got affected actually by DCG.
That's the Grayscale Bitcoin Trust. That was like their partner in that program. They
exactly.
They kind of
we told people to and they managed to like take the money out basically before they stopped.
It's funny because we were giving that advice, and I have money in that protocol, and I was like, like it's okay, like this is bad, but it'll be okay. I should have listened to our like we're giving the advice for people to get out, and I was just like, I'll do this later, and then
you're just a little slow to act.
Yeah, and now I'm like,
and you know, and
like
and
half
same
of
thing
Bitcoin
with
stuck
like,
in that shit still.
Now it's like stuck. Same thing like with the whole like Harmony bridge hack.
The Harmony
Like
bridge hack.
every minute counted.
We were in there 4 minutes after, not after the exploit was published, after the exploit had started. Like 4 minutes after those bridge protocols were drained, we posted in our Discord, these are the bridge wallets. They're fucking empty. Something's going on. And immediately people who were
take your money out.
Yeah, we were like, get your money out. And people were like, what's the best move here? And it was just like, we don't know the full situation yet. We do know the money in these contracts is gone. Get out. Get out now. Yeah. And I was able to pull out, I took about a 28% like loss because I had quite a bit of money on that blockchain, and the liquidity depth was so fucking shallow that I took quite a bit of like slippage impact.
Yeah, and also they ended up like closing all the bridges.
I got out before the bridges closed. I was able to submit those transactions. The liquidity hadn't dried up yet, and literally, like I said, I took about a 28% loss. 30 minutes later, it would have been a 60% loss.
Yeah, like like it
absurd.
It took a little more time for me, so I suffered a little bigger loss. But people who were waiting for like the next day
or
like
just to see what's really happening, because again, it's hard to understand what was actually happening in the moment.
Right.
By the time the clarity was out there, it was 90% in the hole. Like 90%. It hasn't come back. It's like below 90% at this point still. And this was months and months ago, and I still know people who were, holding on to their depegged assets and like, praying that they come up with a solution. And, I like that was part of the like when it's like, hey, what should we do? It's like, you could do this, but the safest bet is get your money out now. And here are the bridges that are still open. And like we shared, like I helped some people walk through it even because they're like, I don't know how to do this. It's like, let me walk. Here's a screenshot. Let me show you exactly what to do. And that also happened during the was it the circle? Like the
USDC DPEG.
Yeah,
people, because
like one of our crypto can be it's also around the clock. And this was so this DPEG was happening over a weekend, and I had one of the members at night, late at night. And I had one of the members who was who had quite a bit of funds that they had stuck in, well, not stuck in, but they had in stablecoin in USDC, and and it wasn't just USDC in their wallet; it was USDC on the Matic blockchain. So on on Polygon or Matic, however you know that one, but they were like we were talking in the Discord, and they were like, "Look, I don't really know what I'm doing. Can I give you a call?" And so like I was like, yeah, sure. So we called on the phone and spent maybe like an hour walking through exactly how to, unwind this, move it to mainnet, bring it into your account. And then once he finally had it in his, I think it was in a Gemini account or a Coinbase account, then it was like, okay, on Coinbase right now or on Gemini, it's currently, one of these units is selling for like 85 cents instead of $1. And it's like, should I spot sell it all? And at that point I was like, I was like giving you my assessment of the situation is this is going to pass when the bank opens on Monday. So what I would do is, I was like, sell an amount now. Yes. Just to like cover, like hedge a little bit. And then the rest of it, I was like, the rest of it set limit orders at $1 because you'll get $1. I'm very confident in that. And the end of the call, they were like, okay, this is what I decided to do. And they ended up telling me like how they managed their position. And then they were like, hey, there's no other service or anything that I can think of where I can call to get help, one-on-one help doing something like this at like 2 a.m. on a Sunday. And so that was a nice endorsement.
And you saved him like probably tens of thousands of dollars.
I mean the amounts of money that it was it was quite a bit of money. Yeah, it's definitely like a function of percentage more than like 3%, and that starts being quite a bit of money when you have quite a bit of money. And it also makes moving from blockchain to blockchain during these low liquidity squeezes pretty tricky. So being able to like, because we had to like look through different bridge options to move those assets from Polygon back to mainnet. And just that alone was something that was like, they were like, I'm not sure what I'm doing here. And it's just like, well, like I know this ecosystem, so let's like look at it together, and I'll tell you what I'm looking at and where we can move, and then we kind of did it together basically. I also have stuff on all these blockchains. So then I was just like, okay, I just walked through it on my screen, and I explained step by step exactly what I was doing and made sure that they were able to get access back. And that's a big part of what we try to offer is just like, hey, crypto is, it's a madhouse sometimes, and it's 24/7, it's not, the market doesn't close, and when these exploits happens, almost always it's the weekend. It's because the people who are watching these protocols are also humans, they pay attention on the weekend a little bit less. And so the volume is lower, the attentiveness is a little bit, the response time is a little slower on the weekends. And therefore, big exploits like this tend to happen on weekends. And it's basically people have lives. And so Sid and I are deeply connected into these communities, and we watch these markets closely. So we tend to we're basically watching it for you. And if there's something that pertains to, crypto in a big way, for example, the exploit today, then we make sure that people are aware that this is ongoing, and make sure that we are clear about what we believe is the best course of action given the current understanding of the situation. Because making those decisions, like when we talked about the Harmony hack, in retrospect, my God, we handled that so well. But in the moment,
but it was hard.
In the moment, it was what am I going to do? Because again, it was tens of thousands of dollars. And when I say 28%, that's tens of thousands of dollars that I lost. And in the moment, it's it was 4 or 5 minutes into this exploit happening. And of course, there's a lot of that chatter of oh, this is a temporary, this is not what's really happening. It'll be back at peg in a few minutes. This is just, and it's hard to really see clearly. And so being able to make a decision
with so much of money at stake, especially it's very hard to assess the situation.
It's really a skill set in itself to kind of keep a level head and be look, this is what I can see is happening. And I know enough about this technology to understand what I'm looking at, to then make the call to take a $20,000 or $30,000 haircut just to get my capital out, which is a very difficult decision to make. I have to say it was definitely a difficult thing to do, but it was the right call. And it's definitely part of what we try to help people kind of cut through all this noise, because it's really difficult to make these decisions and to see this kind of stuff happening as it happens. And like we shared the screenshots here, we were posting about this before the affected protocols tweeted about it, or before they put warnings onto their own
CoinDesk,
if I go to Curve, if you go to curve.finance right now, or curve.fi, they have a big red banner at the top. Hey, this exploit is ongoing. We shared this information.
Let's check it out.
We shared this before they even did that, and they are the party who was affected. It's curve.fi, and then is it there, the red banner.
Yep.
So we had our finger on this before even the affected protocol was warning their users, and that's definitely that's not an isolated thing. So we have a track record of doing that effectively for our members. And so if you are a participant in DeFi, this is absolutely another aspect of value that you get from participating in our Discord server.
But
it was a crazy day today. This is a big exploit. And the craziest part about this, exactly. So it's not great news for crypto, but we're also looking, mostly we trade the chart. We're not looking for news to trade on. And so our sentiment of, potentially this market continuing short is mostly informed still by the chart. And we looked at the chart having that rising wedge with the divergence of the sinking volume. And again, with the DXY here potentially continuing its move up, it's really going to be I feel like you were about to say, it's really going to be all eyes on DXY to see what's going to happen. And so as always, we're trading the chart first. We can find good or bad news every day, and so its chart is kind of law. But it's obvious that, these assets don't exist in a vacuum. The news is relevant. And so we absolutely try to keep the news that we share about these crypto markets specifically. We do try to keep that news relevant. So, there's a ton of news all the time, and we're not sharing everything, but we will absolutely share it when there's some kind of exploit, some kind of insolvency rumors that have credible sources,
Right.
like those mean a lot, and those are things that, people don't necessarily have their ear to the ground the same way we do. And that's part of what we like to keep people informed about. And like I said, we've had a pretty good track record of getting ahead of these kind of events. So
and also I think we have some big tech earnings coming up next week, so we'll see how that shapes out. I believe Apple, Amazon on Thursday. So like these they can move the market. So
although a little bit less this time, since we didn't mention it specifically, but the QQQ, which is the NASDAQ index, recently restructured their weight structure of how much the Apple, Google, Microsoft, so the way that the QQQ works, or the index you have pulled up here, the NASDAQ, it's a basket of 100 different tech sector stocks, and the value of the index itself represents the motion of all 100 of these stocks moving. But I think it was about 2 weeks ago they restructured it. Before that restructure, 5 of the 100 shares represented 50% of the value in this index. And since 2 weeks ago, that index has been a little bit restructured to reduce the weight that Apple, Microsoft, I think Amazon, I forget what the other two were, Tesla and one more, like the big tech giants. They no longer move the index on their own. So in the past, like last earnings call, for example, Apple having a positive earnings call really saw like the QQQ
or like Microsoft. So we'll have to see the coming week how it plays out, right?
Yeah, exactly. So I'm expecting, honestly, probably positive earnings for these companies. The way every other earnings have been coming, I think it's going to go well.
I think so too.
We also are seeing, generally kind of a bullish sentiment in the stock markets. So I wouldn't be surprised to see this continuing up. But it is approaching kind of a historic resistance point here, like basically the last line of defense for the bears here, before we get new all-time highs. And that is almost certainly going to be a bit of a fight versus pumping right through with some positive earnings. So I think that the DXY is going to be a great one to keep an eye on. And then also these earning calls probably going to be positive, but we'll likely see a little bit of like chop, maybe a cool off, so that it's not just a continuous straight line run up. And again, what we're looking for there is the green strength band to remain as our support. We want to see it bounce. Yeah. We want to see it bounce from there, just like it has in the past. Exactly. So let's keep an eye on it, right? It's another trading week. We're also, like we're saying, there's still short squeeze opportunities coming out down the line. We're still actually participating in a few of them in the Discord. We're chatting it up. This. Yeah, this one might be a decent candidate to short on the way down. If the parabola is breaking now, then like we're saying, 60 to 80%. We could see this pull back to like $8 to $10 or something like that. And if it does, there can be profits on the downside too. Short selling is a little bit more tricky, I would say. So if you're not comfortable doing it, there's no shame in not participating in that. I would say.
Yeah, just find another stock to long.
Exactly. Yeah, buying shares is easy. Managing margins,
thousands of stocks.
Exactly, but managing margins, managing future contracts or option positions, that can get pretty tricky pretty quickly. And so of course it's something that like I like to do it. I've done it for years and years, so it's a little bit less of a gamble when I'm trading them, but it's still absolutely the same amount that it amplifies your upside, it amplifies your downside. So where you have room for error with a spot trade on a stock, that room for that margin for that error is much, much, much smaller when you're trading an option or a future contract. So keeping all that in mind. And of course, if you do have questions, the Discord is the place to come. Just ask away. There's lots of, basically, especially with options. Options are a tool for an investor, and they're a tool that you can use to create all sorts of positions. It's not about short selling and leveraging a long trade. You can create a bunch of different, like pretty much any strategy using option contracts. And so, you know, if you're curious about some of these strategies, or you have an idea for a strategy, this is also a great place to just run it by everybody. Like, hey, here's what I'm thinking. And
sign up.
People are,
Maxi, our members get, you know, all this information.
Yeah, and it's a live chat too. So when you're like, hey, I'm trying to do this, like we'll talk you off the ledge if you're about to do something stupid.
That's right.
Yeah, but yeah, it's been a pretty crazy week already, and you know it's just starting. So definitely with crypto kind of going wild, and then last week the shorts are still in kind of full swing, and like we're seeing the bull market maybe back already in like swing here in stocks. And so if we did get that short of a bear cycle like we saw in those monthly charts, if it really was that short, there is absolutely a lot of institutions who are still lagging behind their shift from bear back to bull, and that lag is going to continue to create more short sell opportunities on stocks and equities that have been, you know, over shorted by these institutional players. And there's a lot of opportunity for us retail traders to capitalize on that. So we'll have to keep an eye. We'll keep an eye out. We're always looking for squeezes. We got a few members in the Discord too who are pretty great at calling out squeezes. I think I gotta say shout out to Cape Heath. Really, the squeeze master. He's
we're calling him the squeeze master.
It's a nice joint effort. He'll point out squeeze charts, and then Sid will chart them and point.
I chart them. Look at the TA. So that's also a great thing of having our like community. It's collaborative. We all help each other.
Yeah, exactly.
And, you know,
I see that a lot.
All play things together.
I see that a lot in the chat where people will be like, "Hey, I'm trading this ticker," and they'll be like, "Can you show me where the support and resistance lines are?"
Yeah,
and like people will, like Sid will post like the line. It's like, here's the ticker, here's where I'm seeing support, and so it's like a nice, very interactive, very cool. So yeah, we'd love to see you there if you guys want to join up. It's at maxi.io. And until we see you there, I guess thanks for watching our videos, and thanks for, you know, trading with us. The Trading Buddy has been doing amazing calls, so we'll keep sharing those because it's just kind of fun to like pull up charts with 552% profit and look at that as a spot trade profit. That's bananas. So it's fun. We're gonna keep at it. But of course, it's not all fun and games. There is definitely some risk in these markets, and we also keep a very close ear to the ground for when these things like are playing out in a risky way. And not only are we saying like, hey, there's risk here, or hey, this exploit exists, we're also saying this exploit exists. This is what I'm doing. This is the best course of action that I believe we should be taking given the circumstances currently. And like I've kind of tried to illustrate a minute ago, that is not super easy to do when you are looking at a picture that's still developing. And we absolutely have a track record of, you know, seeing these things as they come and then sharing what in retrospect ends up being fantastic advice in a very, very timely way. So beyond just the Trading Buddy indicator script that you get access to and the community, there's also that side of it. And I guess today was a great example for kind of like tooting our own horn a little bit about that, because as painful as these hacks are, it does really kind of speak to like the finger that we're keeping on the pulse here, to be able to see it coming, and not just see it coming, but also give the correct advice. Because correct advice in a timely fashion is everything. You know, those last 30 minutes to that 1 hour difference, it makes that difference is it's a difference between you went broke or you took a 10% loss. So crazy week. Let's see how it plays out. But until next time, we will see you over in Discord, and happy trading. And of course, let's keep squeezing these big old institutions.